If you want to be a consistently profitable trader, it's not enough to just align yourself with price. You also need to align yourself with the aspect of time. And that's what we're going to be talking about today. So let's get right into it. So first of all, we need to understand what times do we actually want to operate within. So how do we understand that? Well, first we go about thinking about your objective. So if you're an intraday trader, which we are, I am at least, I'm looking to capture intraday movements to target some kind of liquidity, whether that is external range liquidity, like old highs and old lows, like this, or whether that is internal range liquidity. Either way, that is my target as a trader. That is what I'm aiming for, to catch a movement in the direction of these liquidity targets. So then to come up with what times am I going to be trading? Well, I want to figure out what time these liquidity targets are getting hit. Okay. And if we go ahead and we investigate what's called the kill zones, okay, so these are the first hours of London session and New York session. Obviously, there's an Asia kill zone, but I don't operate within those times, and I'll explain why in a minute. And then, actually, if we go and investigate these kill zones, you'll see that we have a lot of movement within these kill zones, right? You can see here we have this old high that gets taken out by this New York kill zone. We have this old low that gets taken out by this New York kill zone. We have this old low here, which gets taken out by New York kill zone. Now we're on gold, so a lot of it is going to be New York. But then if we go on to Euro USD, for example, you can see we have a big impulse here in London to take out external range liquidity. We have another big impulse in New York to take out external range liquidity. We have another big impulse here in New York to take out what? External range liquidity. We have a big movement here in London to take out what? External range liquidity. So if we know our objective in the markets is to target liquidity, and we see that liquidity is targeted within these kill zones, then that is the time that we would want to operate within. And there's no reason to operate in any other timing if we know that there is an extremely high probability that these kill zones are going to go to the target. So now we're going to look at a practical application of this, okay, at a trade that I personally took on gold. I'm not going to go too much into the context, but essentially I was buying within this leg here. I was looking to buy within this 1 hour FVG. Now, for me personally, my model, without the aspect of time, right, just the price elements, is to see price take out some kind of liquidity into a buy zone, right, with a higher time frame bias backing it up, which this trade did have, and then I go and look for an entry to then target liquidity, right, like the objectives that we spoke about earlier. So that is essentially my model to a T, right, very, very basically. And if we have a look at this chart here, you can see that price comes into that higher time frame zone. We go on to the 15-minute, you can see that we take out a bunch of liquidity, right? We take out this old low here, we take out this old low here, and we take out, this old low here. So we take out a bunch of liquidity into the buy zone, okay? So that fits that criteria. And from here, I would be looking for an entry. Now, if we look for, where price gave a CSD, right, a change of state of delivery, where we would go and navigate an entry off of, you can see we formed this 15-minute order block here, right? These three bearish candles got closed above, and price does start to build some kind of bullish order flow, but you'll see that it's very slow and it's very choppy. And if we play it out, you can see we build the order flow and then that fails, right? And price comes and we take out this low again. So why did it fail? Well, because we didn't have the aspect of time on our sides, right? If we actually were to put on London and New York kill zone, you'll see that this is none of those. This is not a kill zone, right? We're not playing within those timings, which we know are the key timings for price to head towards our target. Now, if we put on Asia kill zone, you can see that this occurred in Asia. Asia formed a low, started to build some kind of bullish order flow, and then that failed. Now, why don't I operate in Asia kill zone? Well, exactly for this reason. Asia is usually just a consolidation, a build-up of liquidity that the other kill zones will manipulate and then go to the target. So now once price took out this low and we are within key timings, this is 7 a.m. Okay, the start of London kill zone is 7 to 10 GMT. Okay, so those are the timings for London kill zone. You can see that we take out liquidity and then we give another CSD. Right, except this time, what do we have on our side? We have the aspect of time. If we draw out the model, again, it's the same thing. Price has taken out this old low, right? So we've taken liquidity, we've given the CSD, we're in a buy zone, but we have that aspect of time. And this time, price respects the CSD, and we go and we target this liquidity that we was looking for. And as we know, right, these kill zones have a high probability of going to the objective. And that is why this held and the other setup outside of the timers didn't hold. Now, if you're struggling with your win rate, you're getting into trades, price isn't running to your target, and you're not implementing these kill zones, then you definitely need to be doing this. I'm going to pop the times up on the screen real quick so you can go and put in an indicator. But I actually have something that takes it to the next level, another level of accuracy. So let's talk about that. So what I use for that next level of accuracy is daily cycles. And essentially, they are frameworks that incorporate time and price using the kill zones and price movements. So for instance, one of the daily cycles is we have Asia session, okay, consolidating, like I say, building liquidity. And then we get London kill zone actually takes out Asia low, okay, takes out that Asia and then expands to the upside. And then we get New York kill zone that continues this move. Now I have 8 daily cycles, okay, and this is just one of them. This is more basic one that I show people. And essentially this is the daily cycle. Now what this allows is another level of accuracy, because not only do I know, okay, we want to be buying within this kill zone, we want to be buying within this kill zone, but I know when the kill zones should stop running, so I know a perfect time to take my profits. I also know what sessions are going to hold and what sessions are going to fail. For instance, I know for this daily cycle to play out, Asia low is going to fail. Okay. I also know that for this cycle to play out, London low is going to hold. So by knowing this stuff, I'm not just taking a punt at whether this buy zone is going to hold because I'm buying within this kill zone. I understand that there's an extremely high probability framework already on my side. If you don't believe me, you should go and backtest this framework yourself, right? This cycle plays out all the time. As you may notice, we have the perfect example of it here. So you can see, okay, London takes out Asia's low, okay? We take out Asia low and then we get an expansion to the upside. So after we get that low taken and London making a low and pushing to the upside, when it comes to New York, I know that London should hold. Okay, so I'm not just shooting in the dark thinking, okay, is New York going to come down here and then I'm going to get my entry? Or is New York, going to respect this and I'm going to get my entry? I know that this framework that is playing out means London low has an extremely high probability of holding. Now, like I said, not only do these daily cycles frameworks tell me what session lows are going to hold, what session lows are going to get taken out, how the sessions are going to play out and in what order, but they also tell me exactly what time I should be taking profits on my trades. So I've got another example here. It's a completely different daily cycle framework, but that's not the important part. Okay, the important part is the timing of the exit, which I'm going to show you. So price taps into this FVG. I was expecting higher prices from here anyway. We go on to the lower time frame on the 3-minute. We have clearly taken out liquidity, right? And we have this 3-minute CSD. And as you'll see, we are within London kill zone. In this cycle, again, we're expecting an impulse in London. Okay, you'll see that price respects this CSD. And then after respecting the entry, price impulses to the upside, right? You'll see that we take out these equal highs, which is where the majority would take out some profits, right? Because we are at all-time highs. We don't have any more liquidity targets on the left. However, these daily cycles tell me specific times to actually take profits rather than just basing it off of price. So again, we're talking about the alignment of time with price. So the time for this specific daily cycle, okay, is in that last half an hour of the session, right? And as you'll see, when do we make the high? Right, we make the high here at 9:30, which is exactly when I just said, right, the last half an hour of the session. So let's say, again, your entries here at the CSD, even if you put your stop loss at the low, right? If you're taking off profits here at 1 to 2 and you're closing the whole trade, you're missing out on a significant amount of profits by not being aligned with time. Okay, so you probably would have gotten out, if it's within that last half an hour around the closures of these candles, right, which would have doubled your risk to reward. Now, if you want to know more about daily cycles, I'm going to leave a link in the description that you can go and check out. I'm also going to leave a link to a free PDF that I created, which is my 4-step trading model. I hope you found value in this video, and I'll catch you on the next one.